This conference
Yeah, okay.
will now be recorded.
So I'm recording this also, and once we finish this thing, I will sharing this PPT and this video, this whatever I'm teaching you. Okay.
Yeah, that's fine. That's fine. I'm just
Oh,
going on mute so that only I'll unmute myself when I need to speak.
yeah, that's great. So that there'll be no disturbance.
Correct.
So wherever you have doubt, you can just no stop me. Okay. Once I finish one slide, then you can take your questions. You ask me questions. So that
Sure.
wherever you have doubts, you can keep clearing it up.
Yeah. Okay.
So just I'm taking you through the contents of the course. First, we will see about what is a trading business as a business, so how we'll do it, and what a trader's psychology should be, how a trader should behave, how we should execute this business. Okay, for every business there is some requirement. So this trading is also a business, and what is the requirement as in psychological level? This is a major thing actually. One trader is needed to take care.
Yeah.
Then how to manage your risk, because you're as a like doctor or engineer something, you are spending your time only, but in case of trader you're going to put your own hard earned real money. So risk management is very very important. And then how you manage your money, because you have to take care of your inflows outflows. If you're not a finance person, okay, the money management is also, because as a finance person, okay, what is the income, what is the expense, what is the outflow, what is the total profit, those things they know what is P&L and all. Like non-financial professional, they need to know how to manage your profit and loss account, what is the inflow explore, everything they should know how to manage your money. That's what important.
Yeah.
Then technical analysis is a very very important thing. So because you have heard about one chart speak 1,000 words equivalent to the one picture. The same way one chart can tell you everything. Everything contains in that, because any trader who's taking position in a particular instrument or something, they already have the inside information about it, and they will take position. It's not that nobody knows anything. Exception will be like in case of India demonetization, or maybe global scenario like Brexit or US election outcome, or within the elections results outcome, whatever be the case. Okay, even the tsunami comes also, whatever. Okay, one should not bother about that, because all the guys who are inside, okay, they will not the smart guys will not lose money. So just we have to follow the smart money and how to take positions with them, because they will not let you down.
Yeah.
That's very important. And the trading principles, what you should follow, what should be done, what should not be done, that is the important thing. Strictly we have to follow with discipline. And some you have heard about WD Gann. Okay, he's a very famous person in a trading scenario. And some few principles what he has given us, I'll give you some snapshot of that. Some Gann wheel, Gann fan, Gann and square of 9. Some
Yeah.
few things I will give you hints of it. And then what are the different types of trading is available, and which one is ideal for you, how you can take it. And the importance of volume in trading, about that volume profile, market profile, volume analysis, okay, price action, those things we'll see in this. And about the derivatives, and get to the depth of the trading style, how
Yeah.
to trading using derivatives. Okay, so first we'll see these two things in the next 1 hour, 1.5 hours. Okay, till the 4:30.
Okay.
So for to start with, the trading is a business. First of all, trading is not excitement, trading is not fun, trading is not time pass. Okay, it is a purely a business. Okay, you cannot run a business just for sake of doing something, and because you are going to put your real money. Okay, there are two things: trading and investment. When you do trading, it is a short-term scenario, or micro scenario, where you get in for lower price and get out a higher price. But in case investment, there is no need for you to monitor, but definitely you have to keep monitoring the portfolio at regular intervals. In case investment, no need for any very close watching of your portfolio required. But in case of trading, you need to have a very close watch on what's happening. And
Yeah.
particularly if you're having a wide portfolio for trading portfolio, then you have more insight into your portfolios. Otherwise the problem can creep in any time. But most of the times the problem will come in advance, telling you some indication. You should be able to read the insight of that, because the first thing is the fear about the gap down, gap ups, any big scenarios, world markets changing, several things. One shouldn't be afraid, first of all. When you're trading with your big money, whatever, it's like a trading. No, you having a pet of a lion in your home. Okay, when you have dog or cats at home as a pet, you don't bother. But when you have a lion or tiger in your home as a pet, okay, if you are making the keeping a pet from your home from very young age, from cub, okay, then that time it is not be so difficult for you to handle it, okay, because it is a one of the family, but still you have the fear in your mind. The same way, trading with a big portfolio, when for you 5 lakhs is a big portfolio, 10 lakhs is a big portfolio means, then you should handle in such a way that you are always vigilant about that. Okay, trader is a profession. It's not that a trader means some other part-time professional. If you see, like, if you are a successful trader, then you don't mind telling you I'm a trader. Okay, if you are not, once you've been, for example, a person who have been working as a professional some particular part time, 20 years, 25 years, then you want to become a trader. If somebody asks you what is your profession, you might be hesitating to tell as a trader. Okay, because a trader is not a widely accepted profession like that as such. Because the thing, okay, there is a lot of ups and downs, the gambling. That's the way people think like that. Okay, so you should ignore everything and think trader is a profession and trading is a business, and you concentrate only on your profession. That's it. Once you become successful, people will follow you. Hundreds of people will ask you what you're doing, how you're doing, how you can make money. People will come to you. And as a, like, for example, you are IT professional. Okay, you spend from your school, then college, then IT as a profession. You take undergone some courses, then a lot of learning you've done, certification courses, diploma. Then you become a professional. Okay, similarly, a doctor also, like you joined in a school, then you've taken science course, then a degree, then you've done MBBS, then you specialist in surgeon, and then you work under some senior doctor, then you do work on a dummy, and then you work on a patient with a senior doctor, and you become individual surgeon, whatever, GP. Okay, that's a long process. It takes 12 years, 15 years, whatever, to become a independent specialist. Similarly, a professional trader also, it takes time. First, you have to make fix your psychology, understand what is a trader's requirement, how you need to make up your mind as a trader. Okay, you should ignore everybody outside the people, because a trader has their own problems and benefits also. Okay, you should understand those things, the realities of a trader, and then you undergo learning every day, learn everything new, and then you become a professional trader over a period of time. So it takes some time for you to become a professional trader. For that, you need to do a lot of learning, like how you do learn for your own profession. You have to do also a lot of learning to get to this profession, because this profession has the unique benefits and disadvantages also. Once you have more knowledge, more experience, more time spent with this stock market, then you become you can see the benefits of a professional trader, and you can be a no, you cannot see any retirement in your profession, not like others. Okay, like just yesterday there is news Tesla is going to reduce 7% of workforce. Okay, whatever happens, we don't know. Like automation comes, anytime the retirement can happen, anything can happen. Okay, for this case, there is no retirement, there is no end at all. So what is the benefits of being a trader? Because there are been pros and cons of being a trader. Okay, one should be very clear about this. First of all, there is no boss. Nobody could tell you, okay, do this, do that. That is a timeline. Your own boss, and you're the employee, everything, and you can choose your own working hours and style of working. Okay, no need to go for a formal dress code. You have to wear a tie, you have to wear this thing, color code, all this is not required. You can do whatever you want. You do not even take a bath and just come and sit and do trading also. You go for outside somewhere, and then you can do trading also. Just need internet connection and a laptop, that's it. And then you can decide to what to trade, when to trade. You don't want to trade, for example, you want to go for vacation, you don't want to trade, you just leave it. You can go for some different strategy where the amount of income will be very less, but you will get some income. Okay, something, a different style you can adopt, and you can fix your own profits. Okay, it's not that is salary, like fix a salary. Okay, yeah, I want say $1,000 profit this month. Okay, I can fix my own profits, because it's up to you to select a strategy, select a style, and how to enter, how to exit, all fine tuning you need to do, so that accordingly you will get your profits. Important thing is that every trader is unique. Even though you learn from me or learn from others, whatever, the top trader, Jesse Livermore, anybody you learn trading, you will develop your own style, because every fingerprint is unique. Same way, every trader is unique. You will develop your own style based on your knowledge, your risk appetite, and your thinking, expectation, your mindset, emotions. Okay, so everything is a combination of that. So you will develop your own style over a period of time. You will never, though you try to copy somebody, you will never be able to come like that person. You will develop your own style. That is the uniqueness of trading. And once to become a trader, you should be passionate. Okay, if you become a trader just for sake of somebody else become a trader, or somebody is earning income, somebody is become millionaire or something like that, you cannot become a trader. You have to have patience and passion for this trading as a profession, understand the realities, and lot of analysis insight is required with to become a trader. Just for sake of somebody is asking you to become a trader, or somebody is doing something great in a trading profession, you cannot become a passionate about trader. That is very, very important. No retirement, and here like no retrenchment tension, or somebody, the company is going to sack, or the country is going to send away people, or anything like that. Those things you don't have. No retirement at all in this profession, and you can continue till your death. But how far you'll be able to do it, that's different thing. But there is no retirement as such. If you have the style, if you have the energy, if you have the willpower and wealth, you can definitely trade till your death. And you can focus on other activities also, like you finish your trading by 3 o'clock. Okay, you just do intraday trading, or sometimes you finish your target for by 1 hour 2 hour only, then just close it, exit, and you can go out. You want to go out somewhere, whatever you want you can do. There is no compulsion. No, you not answer anybody, you not get permission from anybody. You can do on your own anything what you want. But all these things can be attained once you become professional trader, and you know what how you can handle your things. That's very important. It's not that from day one you can achieve these benefits. One, it takes time for you to achieve these benefits once you become professional trader. What other side of being a trader? No guarantee fixed income. It's not that like salary you get monthly income. Okay, there will be ups and downs, but definitely once you know how to manage your risk, profits will flow automatically. In the stock market and trading, only main thing is how to manage your risk and how to reduce your cut your losses. Automatically these things, if you know, you can improve your profitability. And one should become panic, and you're going to trade with millions of traders and robots in the market. So unless you have edge, you cannot make profit, because there is no separate money that is coming from to you. It is that you're going to take some money from others who don't want to share their money with you. Okay, so you're going to trade with so many people who are you don't know who they are, and you're going to take money from them. They are also intelligent, you're also intelligent. Whoever is intelligent is going to get more money. And you have to keep updated a lot of developments in various fields, not in like somebody in medical field or some IT or engineering field. Only they need to know those things. It's not like that. Here you need to know, like you're, for example, you're trading in a pharmacy company, you should know what are the developments happening in the pharmacy industry, and what companies are doing, how the management is working, what kind of governance is maintained. Like if you see yesterday about the Sun Pharma governance issue was there. Okay, how this was how affected the company's profits, and how this is going to affect the price, and what is the bottom, and so many things you need to understand. It's not that only one thing you need to see. You need to see several things if you're trading with particular stock and you're having a portfolio in that. And you need to have strict discipline and patience. Both things are very, very important. It's not that you do 100 trades, 20, 200 trades, you make profit. It's not like that. With single trade, you can make what are profits that you get in 200 trades also is possible. So for that, you need to wait here, very patient, wait very patiently, and discipline. Discipline and patience are very, very important. And external factors also play a lot in trader success. So certain things like if in India you saw demonetization or Brexit, or what are that crisis, currency crisis, okay, tsunami, world war, okay, something this can emerge anytime, like trade war, all these things. We don't know which one will come what time, and then we should be ready for that and see how to handle that. That is very important. And always you have to see how the smart money is playing, and how you follow their smart money and take your positions. Never you should be trading against the trend. Contra trades may not work all the times. And mostly lead a solitary work lifestyle. Since as I told you, like every trader is unique. Okay, your trading style will be different with others. Even though you sit with other trader and do trading, okay, you cannot copy him and he cannot copy you. It is a unique trading style. So you always will be lonely doing the trading. That is very, very important. It's not an office like how we have several colleagues with us. You go out, you work with them, you tell them to do, you can delegate. That is not possible here. Okay, you have to do independently. That is very important. So that's the one disadvantage of being a trader. Okay, any questions on this now?
Yeah, Ramesh. Probably I have a couple of questions. Let me just ask them. So you spoke about assessing the economic scenario and its impact.
Uh,
How what how do you, or what is the best way to assess the trends? For example, way back in 2008 when there was a deep recession, and now you gave few examples. Uh,
hmm.
so how do you assess the economic trends and its impact? Do the charts help you understand the impacts? Or
Yes.
because what is important is before the other traders react, because once everybody starts reacting there will be an impact on the market, but before that you should be sharp enough to pick up those trends and understand how the market will really respond to it and what are the implications. For example, demonetization, or bringing in GST. uh, how do we assess that? So that is my
Okay.
first question. I'll go to the
See,
other ones
okay.
later.
I'll answer that. What happens that many of the traders lose money only hunting for the top and the bottom. Okay, that's the first mistake traders do. That is not required to be done. Okay, you go with the trend, and there are different time frames in charting. Okay, minute time frame, 5 minutes, 15 minutes, 30 minutes, 1 hour, 1 day, week, month, everything is there. Okay, I will, when it comes to technical analysis, I will show you all these things with the proof of charts. Okay, what happened at the time and how you could have avoided losses. Okay, even the February crash, September crash, any market, even Bitcoin. Okay, how you can see from the charts and how you can make yourself prepared for the crash. Okay, so think that whatever happens, a recession, whatever happens, everybody is prepared in advance. Okay, if you see like in the 2008 when the recession happened, 2008 January, the market started falling. In the papers, there was a lot of clues about that in the December 2017 itself, 2007 itself. Okay,
Right.
but many of them were skipping that. Nobody is bothered about that. Okay, when the things went really in the peak, then people took it very serious. Okay, like for example, in the charting, there is one type of chart called Heikin Ashi chart. Okay, and a lot of signals when a lot of signals you get from technical indicators, and you should take each and every technical indicator seriously. It's not that okay, last time this indicator we got this and nothing happened, so let us wait for the signal to reverse. That should not happen. Anytime the signal can be getting into the very peak and momentum can increase also. Okay, so you should always keep note of this things what's happening. That will give indication of that. You're not bothered about that at all. If the recession is going to come or any problem is going to come, all the smart money will take positions. Okay, so I will tell you those are the things which you have to monitor those indicators, and that will give you very clear signal of the upcoming downfalls.
Yeah. Okay.
Okay, so you're not bothered about so much of thinking or studying about the economic indicators. Everything will be bullshit. So you should not bother because there are so many things will come. How you can monitor something will come in newspaper, something will come in internet, something will not come at all. You don't know at all, correct? So how many things you will be keep tracking?
Yeah.
Okay,
Yeah.
so like demonetization, Prime Minister knows and the RBI governor knows, nobody knows, and the people who are printing the money there, okay, nobody don't know. So how will manage that? If you see the Bank Nifty on the day, next day of demonetization announcement, the Bank Nifty crashed by 1,200 points.
Wow.
Okay,
Okay. Yeah.
okay. The fun part is in the last 6 years of Bank Nifty, there's the only time the Bank Nifty crashed by more than 1,000 points in one day on gap up, gap down.
Oh.
Okay,
Okay.
so traders are not prepared for that. Okay, so the money, the market, stock market always favors the people who do writing, option trading.
Right.
So
Okay.
nobody was prepared for that. And what happened once we went down 1,050 points? At the end of the day, you know what happened? It closed flat.
Is it?
Yes. Okay.
So it came
So
it came up and it adjusted
kind
itself.
of flat. Yes, yes. Even Brexit, the same
Wow.
happened. See, because Brexit, they don't know what's outcome. Okay, though it went down. Okay, and went up and closed flat. Okay,
Right.
so when
Right.
the top traders are not informed about something beforehand, they will ensure to not to be trapped. Okay, so always ensure that you will not be trapped if there is uninformed news something and hitting the market.
Right. So in
That's the
such
one.
cases, what do they do then? And how do you safeguard yourself?
See, safeguard means you should first of all not panic. Okay. For example, you have both long and short in system. You have a long position, short position. Okay. You can do like
Yeah.
you can buy option, buy call option, buy put option, buy sell call option, sell put option. 4 positions you can have in options. Assume you have 2 positions. Call you shorted in the money. Okay, we'll come to that thing later. How those things can be
Yeah.
done. Okay.
Okay.
But thing is, first of all, the real panic should not happen in your brain, amygdala. Okay, if that happens, then only there's a big problem happens. Otherwise, once you know the back end data, what's happened, and you'll not be trapped. That's for sure. As a trader who follow the smart people and who follow the charts, believe in the system, you should not get bothered because the people who get panicked so fast and who are weaker traders and less knowledgeable people will get panicked. Okay, there are a lot of clues we can get actually from system where you will never be trapped. Okay.
Okay.
So we'll move to the next. I think things what we will cover most of times. We'll cover your questions most of times. Okay.
Yeah.
This is reality of stock market. You can keep take your notes, everything also. What are doubts? Maybe in the end, maybe you can cover also. Okay.
Yeah.
So what are
That's what I'm
the
doing.
reality of stock market? So stock market always manages smart brains. Only 5%. You would have heard that 90% people lose, 5% break even, and 5% lose make money. This is a fundamental stock market how it works. Okay, and are very tough if you don't have enough insight. If you're not confident, if you're not brave enough, or you don't have enough insight, then it's a tough job and a very horrible place. It's a place where you are getting rewarded for discipline, having an edge, knowledge, and patience. If you see like on when a Friday, okay, so I there is separate Telegram channel for my students actually. So I taught them what they should do, what the strategy, volume profile. So the bank Nifty came down by 72 points, but futures came down only 28 points. But like one particular strike price option it went 180 rupees and went down by 130 rupees. All 50 rupees, 50 points gain was there. So I told them, okay, this is the place you have to see how the volume profile you have to see, and where the selling tail comes, you try to sell. So after the giving the message 180 rupees, not in 1 rupee it went up, it started coming down, it went up to 160, 150, 138, it went. So you have to know, have an edge. If you are seeing something what others are seeing, then it makes no difference because you'll do the same thing what others are doing. You should see something inside because algos are trading with you, robots are trading with you. They have a lot of edge. And for example, if you are trading with one particular trader, trading platform for ICZ Direct, okay, what happens? All the traders who put the stop loss or the positions, whatever, they have the complete visibility of that. So what they do is they pool everything. All the top traders, the trading platform providers, they pool the positions and they can see what is the total position and they will play against you. Okay, so those are the edge they have. So you need to have something better than that, or at least those edge, so that you can also play with them. And stock market don't realize who you are. So stock market makes you who you are. So you may be a good, great personality, like gold medalist in your IIM gold medalist, or you may be a great doctor, surgeon, and a great engineer. Okay, what are maybe the profession? But here, when you come here as a trader, how you're going to perform matters actually. Okay, so as a trader, once you gain the profession, once you gain the knowledge, and what is the measurement of your result performance, it will tell you who you are and how you can perform, how you're performing. And markets do not forgive and punishes for lack of discipline. It's not like, for example, a surgeon does a operation and some failure happens, the patient dies. Okay, the surgeon can tell you, sorry, we are sorry, we could not save the patient, and that's it. Nobody is going to punish. Okay, but in market, we cannot tell stock market, sorry, I made a mistake this time. Please forgive me. I will next time do proper trading. That cannot happen because the stock market doesn't have any heart, brain, nothing. Okay, immediately when there is a mistake, it is punishing you. Okay, so it will be very careful with the markets and doesn't listen to you. And a chart speaks 1,000 words. Okay, so we have to see how you are good in analyzing charts. And most of the charts patterns, everything people know. Bullish engulfing, bearish engulfing, Marigozu, shooting star, hanging man, spinning top. Okay, there are a lot of candlestick patterns are there. Those patterns everybody knows. So what happens, like, okay, when there is a bearish candle formed, then immediately you take position for the bearish. Then immediately after 2 days, immediately bullish pattern forms. Then after immediately bearish pattern. So they will trap. Okay, so it is not that you know what everybody knows. You should know something what majority people don't know. Okay, and then they don't recognize you. 90% of retail, the real fact is that 90% retail traders lose 90% of the deposit money in 90 days. That's the fact. So people without any enough knowledge, they come into the markets, start trading. They think that if you have enough funds, they can do trading and then make money. They just, what you have to do is buy or sell. That's it. No? That's what they think, but it's not the case actually. So one should be careful with their money, what they bring in. Consistent profit is not possible. Even though there's a professional trader or you're a great trader, there will be ups and downs. Okay, net, how you're making money over a period of time matters actually. How the trading process is, how vibrant is your trading process, how best is your process, it makes you consistency in the profits. Stock market is like a casino. Okay, many of them will tell you, okay, it's a gambling casino and all. Okay, definitely stock market is a casino. Okay, it is up to you to decide whether you want to be a casino operator or a casino player. If you see roulette, you have played casino, correct?
Yeah, I know it.
Okay, have you played casino anytime?
No, I've never.
Never, huh? Okay. See, if you see the roulette, okay, this is a roulette, no? Where somebody bets, okay, somebody bets red or somebody bets black, okay.
Correct.
This is the how they play actually, okay.
Correct. Mm-hmm.
What happens, for example, the player who's betting on red, there you can see number 1 to 36, okay.
Mm-hmm. Yeah.
So people think that the probability of the guy who's betting on red is having a probability of winning is 1 divided by 36. So red 50% probability, but that is not the case actually. But if you see, there is something called 0, 0 and 0 also. Okay, that is the trick the casino players have, casino operators have. So
okay.
the actual probability of winning for a person who is betting a casino player is 18 out of 38. Red is betting on red means he is betting as 18 divided by 38 total slots.
Right.
So the probability of winning is 47.3%.
Right.
And a casino operator who is taking the bet, the probability of success is 20, which is 18, which is the opposite other color of black, plus 2, 0 plus 0, 0.
Correct.
So
right.
the probability of winning is 52.7%. So the net beneficial over a period of long time for the casino operator is 5.4%.
Correct.
Meaning, if $1 million is bet by the players, the profit that's going to gain is 54,000 rupees, $54,000. Okay, this is how the business model works for casino operators. And how somebody betting on 0 means the probability for winning is 1 divided by 38. Okay, so this is how the probability of casino operators work. So the casino operators have a business model, how they work. They have proper statistical edge over the players, but a player doesn't have any edge over that, and they just bet it, and then in the long term they are going to lose it, and everybody knows that. So there is no business model for casino players. So as a trader, if you don't have any strategy, any trading process, any model, then you will become a casino player. So you have to decide whether you want to be a casino player or a casino operator. That's the first thing. So trading is not a gambling, or trading is not a excitement. Trading is not a game. Trading is not time pass. It's a pure business, and it's a business model. You have to realize that first. It's the main thing before becoming a trader. There is a lot of ups and downs, but definitely the reward also is good. If you deposit money in a bank deposit, or if you in UK, how much deposit rate you get? 2% for fixed deposit.
Yeah, 1 point something. It's even bad.
1% per annum. Correct.
Yeah.
Okay.
Correct.
So in the market, if you once you gain the enough knowledge and you are able to play around it by doing a business, it's a fun. It's in the positive manner. Okay, it's a fun, and the time spent is very less, and you just get in and get out. That's it. Okay, and there are a lot of different strategies for people who work also. okay, where you can just sell very long-term options, and you wait for money to come very slowly. Okay, but definitely the return is better than what you can get from FD, 10 times. You sell a option, call option, a put option, which is almost 6 months old. Okay, which is around 300 rupees per lot. Assume. Okay, you get 6,000 rupees for a margin of 50,000 rupees. Okay,
Yeah.
and but you have to wait for 5 months. You do not do anything at all. Just you sell one lot and just forget it. Okay, and you have to take position, hedge by selling call option on the very far. So whenever the market moves very drastically in the short period of time, then you take positions and keep selling more calls and book profit in your call position. That's the time you have to take position. Otherwise, because 80% of time market will not trend, it will be just range bound. So you will not bother 80% of time. Only 20% of time you should be in action. Okay,
Right.
that is very important. So because you will not bother each and every moment, because if you see Bank Nifty, it's 27,500. This time it is very strange and funny and interesting that we closed at 27,529. 0.5 only difference compared to last week expiry. We just closed like nearest to the same 0.5 difference only compared to last week. 5 trading days. Okay, and there a lot of movements are up and down, but we closed near same position where we closed. Okay, so somebody who shorted a call and put off that same 27,500, it's around 400 points that they pocketed without anything. There is ones who will not bother about that, they pocketed the entire money.
Right.
Okay, so 80% times it will be range bound, and you should not bother about the trending move most of the times. But whenever it comes very aggressively. If you see like Bank Nifty, it fell down by almost 3,000 points in February and September. 2 times we got trending move in the 12 months time, which is almost 20% of time. Okay, so that's what happens actually. So that these are things, certain rules and regulations. You put your subconscious mind and store it. So you should not bother about small movements. Any suddenly there is 100 points down movement, 200 points movement, you shouldn't bother at all. Okay, so when you have enough knowledge, you should not be afraid at all. So trader success like iceberg. Okay, people see there are a lot of traders who are successful, and they see, okay, how successful this guy, he made $1 million, he made this much, he made that much. Okay, but what are all the efforts and discipline, hard work, dedication, persistence, sacrifice, disappointment, losses, so many things should have come to his life. Okay, that nobody don't know. Okay, you would have heard about Jesse Livermore. Have you heard about him?
No.
Okay, just if you try to find out about his story, okay, there you can see some lot of YouTubes or no books are available. Okay, Jesse Livermore. Okay, read about his lifestyle, how become a successful trader. Like he ran out of home with $50 in his hand. Okay, and he went to the stock exchange, joined as stock boy, and then he became a what do you call bucket shop. There is bucket trading. He has done that and became successful. And then he went to the exchange. At the 1929 crash, you heard of that time. That time he made almost $4 billion. Okay, and he became 3 times bankrupt. And at the age of 60, okay, he could not. Third time he could not make up. He could not come back. Okay, he shot himself. Okay, he's seen such ups and downs in his life because of personal life problems also was there. Okay, so there is a lot of ups and downs in the life of a trader. Okay, one should be realize that those things, and don't get emotional or excitement when you, for example, you make a profit of say $10,000 in a particular trade in a day. Okay, you should not bother, or you should not be too excited, because profit loss are part and parcel of your trading career. Okay, because what happens like a trader, if your spouse can smell you whether you made profit or loss seeing your face, okay, then you're a very bad trader. Okay, then like Jesse Livermore, when he came from home on 1920 crash, his wife has cleared all the house items, everything ready for shifting the house. So when wife opened the door, Jesse Livermore came in. So she asked, what happened? I think today will be a very bad day. I kept all the things ready. I think we have to leave the house maybe. That's she was telling. So this guy told, no, yaar, today was one of the best day for me. I made $2 million something, somehow, which is equal to $4 billion at that time. Okay, she was not able to smell that, seeing his face when he entered the house. Okay, so once you become a very competent, professional, and emotion-free trader, everything will be a normal thing for you. Okay, you remember Dhoni, that's it. How Dhoni is doing in your cricket. Okay, you remove all the fear, emotions, greed, everything from your mind, and then just concentrate on trading process, style, and outcome. That's it. Outcome is just a derivative of your entire process. You should not see the profits only, actually. Okay, actually, many traders concentrate only on profits. Profit is just a derivative of what is your trading style, trading process, how you implement it, implementation strategy, everything, how you control emotions. If you concentrate on profits, you'll not be able to do all these things.
Yeah.
So there are 4 stages of trading mastery. First thing is unconscious incompetence. What happened? Somebody, my friend, he bought some call option. Some 10 rupees call option became 100 rupees. And during a session, something you told, I bought some put option. 10 rupees put option has become 1000 rupees. Okay, he will tell you all this thing. Then you started trading, and you will enter the 1000 rupees, and your 1000 rupees become 10 rupees. Okay,
Yeah.
so what happened? Like Bitcoin, example is a good Bitcoin. Because everybody was running behind Bitcoin. Even my sister-in-law, who is in US, okay, she was asking about me whether it is good to invest in Bitcoin. It was around $15,000, $16,000.
Wow.
So it came down by almost 20%, correct? So she asked me, I told, I'm not in favor of Bitcoin. Even if you give $1, I may not go for it. Okay, it's up to you to decide, because it may go 100,000. Somebody is telling $100,000, it will go. Okay, so it may go $100,000. You should blame me, like you told not to invest. See, now it's gone $100,000. If she asked me $100,000, where are you? Okay, so it's not that you do without knowing anything, based on others' advice. If there is a loss, then you get money from your salary or take loan from somebody else and fill all these things. This will not work. Maybe it work for 1 or 2 times. That's it. In the long run, this process will not work, because if you made profit by fluke, then you don't know how you made a profit. There's a big problem. And if you made loss and you don't know how you made loss, why you made loss, then it's also another big problem. So this is the first level of a trading career. Somebody enter trading without doing anything and enter losses, and after some time they understand, okay, and keep filling the losses, and I think we are not going anywhere. Now we have to sorry.
Do you want
Now
to
we
go
have
and
to go
grab
to-
a glass of water, Ramesh?
No, I have with me next. 1 second.
Okay. Yeah. Take it.
Today we are traveling to.
So once they crossed this stage, they understood that this is not going to help. Now they get into some people who professionally who think that these guys are doing giving tips for buying and selling, and they are very capable, and we should follow them. So people get into the trap of these guys.
Yeah.
How these guys operate? These guys operate like they select, say, 50 people. For 20 people till buy, or 20 people till sell. Okay, the sell triggers. Then 20 people are trapped now. Or 20 people you tell again, you sell, buy. Okay, they keep trapping the people like this during the trial course, whatever. Then the people get confident and pay the hefty fees for their trials. And real trial, when they give the service, that time they will loss of money, lot of money they lost. So these are the tip providers or service providers who give, because they don't have any interest. If you ask them, they are not doing trading based on what they give tips. They will tell only to buy or sell, and these guys
Right.
buy or sell and get trapped.
But
Okay.
what is their interest then? I mean, what is the purpose of they giving such incorrect tips then?
They're giving they're charging 25,000 rupees, 50,000 rupees, like that. There are certain people who charge 25,000 per year. Some people 10,000 per month, like that they are charging.
Right. Okay.
So that is their income, no? And after some time, they'll just switch off their mobile. They have a lot of SIM cards. Okay, SIM cards available, and they switch off the numbers. You're not able to reach the guys. Okay, so this is how they get trapped, and after that they realize this is also not working. And the next level is, okay, let us learn from ourselves and then start doing trading our own. So this is third stage. People finish the 2 stages and then come to third stage. So this is where many of people, if you see, like, oh, sir, I have made so much of loss, somebody cheated me, somebody have done fraud, somebody gave wrong calls, I traded, and sometimes what happens that they ask you to trade, open an account in your name and ask you to fund, and they will trade on your behalf. So that they do. So there also they'll make losses because you cannot concentrate so many clients. Okay, so there will be a lot of movements and the interest of what you have in your own money they don't have, because they will take an agreement telling that whatever profit loss is a market movement and they are not responsible. So you cannot even file a case against them. So then people come for learning, self-learning, educating themselves, understanding the importance of learning about the markets and learns about the markets. Then do the trading and start trading with as per the mentorship what they got, and they also do their own learning and create their own unique trading style. Then they come to the fourth level of the mastery, where they become professional trader. After a lot of several ups and downs they saw, now they know what are the mistakes they made, and they know these mistakes I should not do it again because it's a very costly mistake. And now I have to do this way, and this is not the way I should do. And you start doing an unconscious competence. Okay, this is the final stage of a profession, and we cannot tell this is the final stage. Okay, you have to keep learning and you have to keep updating yourself on what developments are happening. Okay, the market may change the timings, the market may change the leverages, so many new regulations will come. Like in China, they have a lot of restrictions on short selling. Okay, a lot of things may change, so you have to be ready for those changes and accommodate yourself the trading styles. Okay, so what are the 4 steps process we can try to create becoming a trader? First, you create an edge. So when you're seeing something what others are seeing, then you are not having an edge. You should have some edge where others don't know that. Okay.
Right.
For example, you use Microsoft Excel, correct?
Yes, I do.
Okay. If you see, like, for example, you have say 100 files with you. Okay, 1000 files with you, and you want, for example, there is something called BAL copy. I get a report from the NSE website. Okay. The data of all the contracts, day wise, contract wise, everything, which is around 15,000 records will be there per day.
Okay.
Roughly. Okay. If I give you 10 years data, which is around say 15,000 files, I'll give to you. Okay. Right. If you have to extract, it will be CSV file, individual CSV files.
Correct.
Okay. If I give you that file to you, a person who knows only Excel, okay, and you have to extract data for ICICI Bank only from all these files, how much time you think the person will take?
Correct. Yeah.
How much time you think it may take for him?
I don't know. Many days or probably weeks, I presume.
So a person who is having edge, okay, he'll be able to know. He knows what is Power Query. You know what's Power Pivot. There is something called Power Query is there. Okay.
Correct.
If he knows that tool, then it takes hardly less than 5 minutes to get the data.
Correct.
Okay, so the person need to have an edge of things what is doing. That way he can save a lot of time, he can lot of efforts and work smart. Stress will be less. A person doing, for example, if so much of data is given to you and ask him to analyze this, first of all, it takes several weeks to get the data. And from the data, how to collate everything, do the analysis, you don't know what is charting, how to make graphs, so many things. Then it will take for him several months to do the process. By the time the ICICI Bank data would have changed and the ICICI Bank would have closed. Okay, a lot of things have changed in the banking industry itself. So, thing is that the timing is very important, edge is very important. That is the thing. Unless otherwise you keep yourself updated on the what is the developments, you will not know this. And you have to measure your performance. When you are in the school, there is a progress report. Father, mother has to sign. Then they will ask you, okay, how much marks you got? Why you not done this? Why you not studied this? What are the things you failed? They'll ask so many questions. Teacher also is there to monitor performance. When you become to go into college, there are professors, exams, performances, there, yearly report, progress card, everything is available. Then once you go to the job, then boss reviews the performance reviews there, increment, promotion, everything is there. But in a trading career, who is going to review your performance? You yourself are going to review your performance. So you have to be truthful to you, because you can spouse cannot come and do the auditing, or somebody is going to do the auditing. Okay, so you are the own performance reviewer, and you have to performance review this, and what are the mistakes you made, what are the reasons for your success or failure, what was the reason for success, when you made a good profit, when you made a big loss. So what are the mistakes you made? You have to analyze those things, do the review of that, and you should not do the same mistake again and again. And whatever was benefiting you or good to you, you should do repeat it again. And you should do manage the risk reward ratio. Whenever you take a trade, it is a risk you are taking it. Okay, reward also is there, risk also is there. So what, for example, Nifty now is 11,000, around 19,900 levels. So what is the reward of market moving up, and what is the risk of moving down? That you have to analyze. When you take a position, risk is more, reward is less, you should not take the trade. When Bitcoin, when $20,000, it is going like that without any understanding, reasoning why it is going, all these things. The risk was very high, because when it falls, $20,000 is gone. But now if you get $3,500, the risk is $3,500 only. A reward could be anything on the upside. Okay, so what is the risk and what is the reward, you should see always. And there is a way also to enter the market. Okay, it's not that just for sake $3,500 can come 2,000 also, or 500 also, we don't know. Okay, so that is where the technical analysis will help you in making you explain, understanding where you have to enter. Okay.
Yeah.
Then eliminate the fear. So if you're fearful, then you can never be a successful trader. Okay, risk is always there. You are playing with a lion every day. Okay, if you're always afraid that lion may kill you, it will kill you. Okay, you know the power of subconscious mind. You tell something that will happen, it will happen, it will happen,
Yes.
it will happen.
Yes.
So yeah, there is a professor. You know about the Napoleon Hill? There is a book, no? The Power of Subconscious Mind. There is
Yes.
a book actually. Okay.
Yeah, the power of subconscious mind, right?
Yeah, correct.
Yeah.
Okay, there is a professor who used to tell that if I'm a daughter, for my daughter, I may even give a right hand. All this he used to tell in lecture. He's a professor. Okay, he used to tell every day that way. What happened on an accident? He lost his right hand. Okay, and there was a lady who was not having any eyesight. Okay, so she was always thinking that I will go to one church, one father will bless me and I'll get the eye power, and then one day I will tell, okay, wow, I got my eyesight and I'll become a normal person who can see. These used to visualize every time, every day, every night. She used to visualize.
Right.
Similarly, one day she went to one church, and then father blessed the same way. How she was thinking, the father blessed her, you will get eyesight. She got eyesight.
Right.
So every doctor was wondering how somebody can get eyesight without any surgery, anything. There is very, very less probability of she getting eyesight without any surgery or something. So that's a power of subconscious. You always be fearful of something, and you tell, okay, I may lose in this trade, I may lose in this trade, means you lose. Okay. Not that you'll make profit just by doing buying or selling. Okay, you should have enough knowledge also, and little courage also.
Correct.
So these are things you should take care while dealing the market and becoming a step-by-step process for becoming a trader. So these are the commitments you should give. It's not for me, it's for you actually. Okay, only you enter a trade after you're not going to trade anything now, correct? After some time only you will do. Okay,
Of course.
Yeah,
Correct.
Yeah, so you should do. You do have practice meditation or something, yoga, you do?
Yes, I do. I've been doing it for a very long.
Yeah, that is very important, because people for a trader is very, very important actually. For other professions maybe or may not be important, but for traders meditation is very important.
Yeah.
And yoga if possible, and then whatever the learnings. Okay, it's not that you write like a doctor. When you go to a doctor for some problem, it doesn't refer to book or something and do the surgery or give prescription. It comes from the brain automatically. Similarly, a trader, when you see a chart, when you see atmosphere, when you see the price action, volume action, okay, that time you will not go and refer to my book. Okay, I saw this book, chapter number 13. What it did tell you, you not everything. Okay, this candles pattern, this is the outcome. This candlestick pattern, this is the outcome. When the market goes like this will happen. When the market goes down like this will happen. 80% of time market will be range bound. 20% will be trending. When this price action happens, when this oversold level comes, how it will bounce back. Okay, the Fibonacci ratio like this. Okay, so all these things you should store in your brain, and then you pick up on the right time and implement it. So that you don't have any fear of any movements against you something in the short term.
Right.
And you should be healthy. That's very important, because if you're not healthy, for what you're earning? Okay, should be healthy, and body, mind and soul, you should be kept everything clean, ensure so that you have a clean trading career and don't bother. Okay, if you have so many things bothering you because of your health or mind, dirty mind, whatever, okay, then what happens that you'll not be able to concentrate on trading career. Trading career needs a clean and healthy body, soul.
Yeah.
And trading is a business and not a gambling. That's very, very important. Okay, any trade you take, what is the risk reward ratio? What is the target for me? What is the entry signal, exit signal? What is the expectation from this trade? And how much I should be expecting from this trade? Because you should not be unreasonable, and you should have a smart goal. That is very important. I'll tell you about smart goal in the next chapters. The entire trading success is consists of almost three parts. 15% is your strategy and process, and 15% risk money management, and balance 70% is psychology management for your trading success. Because many people think that, okay, I develop this strategy, this is the best strategy, and I can do big gain from this strategy. That is not the real case. Okay, for example, if I tell you now Bitcoin, all these things are there. Bitcoin is going to $10,000 now. Okay, $3,500 to $10,000. If I give all the proof to you, okay, can you put, for example, even God comes and tells you, okay, whether you'll be able to borrow money from somebody, $500 million, something, and buy big Bitcoin, you cannot do it.
No.
You will not be, because from $20,000 it came to $5,000. What is the guarantee that that $500 million investment will go to $5?
Correct.
So implementation strategy and the process you do it, how do it, because that is very important. Okay, second, because putting so much money in that, okay, whether how comfortable you will be and how confident you will be, you don't know. Because God comes and tells you, also still you'll think whether God will trap me or something, or you want to put me in problem. You will think you will suspect the God also. Okay, if you see Rakesh Jhunjhunwala, Sesagova, the first trade, the big quantity, he made 5 crore shares. He bought Sesagova. Okay, he was so confident. Okay.
Right.
He was able to manage his psychology. He was so confident about what he wanted to do it, how he wanted to do it. He bought around 40 rupees something. It went up to 80 rupees. He sold a few shares, then 100, 100, 200. He just keep going up. Okay.
Right,
Your psychology is fit first, and then you are able to implement your process strategy. Then you are the master. Okay. Titan also, the entire wealth of his Rakesh Jhunjhunwala is in Titan. Okay. He bought the big quantity, almost 8%, 9% of shareholding in Titan is Rakesh Jhunjhunwala.
Right.
Okay.
Yeah.
So implementation is very important, no doubt. But psychology is also more important. How we manage your strategy. If there is a drop, like even Bank of America, when it was down, okay, Bank of America was completely down. Warren Buffett was able to take over that bank, rescue the bank actually, and now it has given him almost 300 times profit in just 4 years.
Yeah.
Okay.
Yeah.
And Wells Fargo also was down actually. If you see Wells Fargo, because of that scam and all, okay, it was down. Okay, now you're still confident that it will come back. Okay, if you or me are there, if something happens to our stock or something gone by 60%, 70%, you would have panicked and I don't know what would happen.
Yes.
Okay.
Yes.
So here, because he was able to, he was so confident about his knowledge, he was able to manage his greed and fear, and he's know definitely the market will go up one day or other. So the knowledge matters also, and risk money management. You spread your risk to so many things. Okay, if you have 20 stocks in your portfolio, each in different industry, and you've done the complete study of that, and you know how to manage your risk. For example, what they do, Warren Buffett, if he's going to take over any company, first he starts selling his puts of the company, and nobody knows that. He sells
What of
big
the
quantity
company?
of puts. If he's going to take over a company, a listed company, he sells the puts of the company. Option, put, no? Correct, you heard about that.
Yeah, correct.
So he sells puts of the company, and the announcement comes later. Then the entire put, whatever is sold, he makes profit in that. Because Warren Buffett buying means started going up, the price started going up.
Correct.
So in the year from 2004 to 2007, almost 3 years, he made $5 billion only by selling put options.
Wow. Okay.
Okay, so put option thing is that naked put option. Okay, that is very important. So people you would heard of blue ocean strategy, correct?
Correct.
So you find a place where there is no competition, there is risk will be there, but definitely there is no competition. Okay, so what happens, like if you see Indian market scenario, okay, people are afraid to stay in the market first of all. Okay, in the market particularly, trading in Bank Nifty is more people are afraid. Okay, because the market can move so much. This thing like demonetization, your GST, Brexit, so much movement will come. Okay, so if you don't know the reality, how it happens, like demonetization, I told you about the thing what happened. Correct, 1050 points drop, big gap down, and closed at the flat. If this fact is not aware of the trader is not aware of that, then they'll be afraid.
Correct.
Okay, what are things you should see when the market is going down? Means how to manage, how you have to cover your positions, how to manage your risk. Those things are very important. If you don't know that, then it will be difficult for you. So people who sell puts, okay, are afraid to sell puts actually. If you see in Bank Nifty or generally also, selling puts means it's a big risk. You sell for 100 rupees, if market goes down suddenly by 500 points, then a big loss for me. The same way selling call option also. But people don't realize that and start selling calls and make losses.
Correct.
So the thing is that you find some instrument, which instrument you want to trade, how you want to trade, what position you want to take. Where many people are afraid, there's a place where you make money. If you see, option buyers always loses. Research tells option buyers always loses in the long term, medium to long term. Okay, if you see recently the Indian markets, SEBI has told to increase the margins of option rating or margin F&O strategies. Why? Because many of them are who are option buyers, they want to promote the option buying actually. People who cannot, because many of them who come with very small capital, say 30,000, 40,000, 50,000 rupees, they cannot short option. Okay, they are greedy also, and they want to make fast money. They think 10 rupees will become 50 rupees, 100 rupees, and they can money. But reality is that 50,000 rupees they bring it, and 1 or 2 months maximum they will lose all the money, and again there will be 50,000, the same fact again and again. Okay.
Correct.
Even if you short one option with the 50,000 rupees, if you just come to that strategy also, how you can double your money in less than 2 years. Okay, a simple strategy you can make it, and that's the way you can double your money in 2 years. Even if you see a bank deposit or anything, it takes 10 years to double your money.
Yep.
Okay, a simple strategy I will show you where you can double your money in less than 2 years. Okay. Now, the component of psychology. What are the things you should take care? Discipline, patience, greed, and fear. These 4 things. For example, the market may have 100 points. Okay, your target of say 50 points or 10 points. Assume 10 points is the target. Okay, you don't think that 100 points won't came and I was able to take only 10 points. I'm very upset with the performance. If you don't recognize your performance, who will go to recognize you? If you tell you are beautiful, okay, if you don't think you are beautiful, who is going to accept you as beautiful? Even somebody tells you are beautiful, you will not agree because I'm not beautiful. Okay, so first of all, you should accept or recognize your own performance. First of all, okay, getting 10 points consistently every day is a great achievement. Great achievement. Okay, Warren Buffett does a 20% profit per annum. Top traders who are consistent in the market for more than 5 years make 20%, 25% per annum maximum. Okay, if you can make almost 20-30% profit per annum, means then you are the best trader. Okay. So very reasonable and consistent. Consistency is very important. If somebody can take 6% per day, assume, then the person can be the richest person in the world, and he can cross Indian economy itself.
Yeah.
Okay. So that is the power of money. You know the power of compounding also, correct? You heard. You know about the story of the chess.
Sorry, say that again.
Yeah, the chess game you were on, the power of compounding chess game.
Correct.
You heard about that. Okay, that's the case actually. So discipline is very important. Market can move anywhere it want. Okay, no problem. I want my points, whatever profit. So at the same time, a trader should know how to gain singles also, sixes also. It's not that you during the 20% of time. During 20% of time, the market is going to trend. I told you, correct? That 20% of times, how you can make little more money, you should be aware. Okay, that is very important. It's not that okay during a trending move also you think of only making say 10 points, 20 points, means then you may be not maturing. Okay, so that time you should try to make little more money. That is very important. So once you recognize the trends, 20% trend when it's going to come, you just keep wait for that. Okay.
Right.
90% notice traders why they lose money, because the people there is no minimum qualification it mentioned for a trader, correct? So people who are thinking that, for example, Vishwanath Anand, who is a very great chess player, he's a grandmaster. Okay, he comes and does the trading. Okay, it's not that because of that Vishwanath Raman is a big chess player, a grandmaster. Stock market will tell, okay, no problem. Whatever you do trading, I will give $1 million. It's not going to tell you, right? So high IQ, high talent or something in other profession doesn't guarantee success in stock market. It's a different profession altogether, because the market playground is different. And higher education, I am gold medalist. I'm a gold medalist in this surgeon. Whatever you be the qualification of you. Okay, it doesn't matter whether you know trading, whether you know how to do trading as a business. That matters a lot. And you come with a big capital, say I can infuse 10 crores capital, my funding trading account, I want to make 10 crores, 20 crores. Okay, you tell this way, it cannot work. 110 crores, 100 crores, whatever, you can wipe it off in no time. Okay,
Yeah.
you heard about the optionsellers.com debacle?
Which one?
Optionsellers.com.
No. No.
So there is a website called optionsellers.com. They are professional money management portfolio managers, where they do option selling, option writing.
Okay.
Okay. They have written a book also. Okay. They have written a book
Right.
also called optionsellers.com. If you just see, you can see the book. And they have principles, everything they set, everything. The Bible is completely Bible is there, all these things. Okay. What happened? They bet on natural gas or on bearish sentiment. What happened? They start selling calls. They went against the trend. The first of all, they went against the trend. Once
Right.
this move happened against them, then keep adding their positions. Okay, they not cut the loss and keep adding the positions against the market.
Right. Right.
And
Right.
market,
Right.
because it's a leverage instrument, then when the market keeps going up, then they could not manage, because they don't have enough cash. Everything is
Correct.
leveraged, and as when the market went up, then they got trapped. And
Correct.
the website, if you go to optionsellers.com, it's closed now. And the
Okay.
owner of that website, he gave a big apology video to the shareholders, telling that I'm very sorry for mistakes, all these things, all this blah 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 blah. Okay, so thing is that big capital doesn't give you any guarantee of your success. Even there is a fund, VIX fund, volatility fund was there. So they always bet on the low volatility. So in the month of August, I believe, when the volatility shoot up almost double actually. Okay, the Central Bank of England volatility went up double almost. This fund collapsed. So whatever the profit they made in 10 years got wiped off in just one day.
Wow.
So, so there is one thing. Capital does not give you guarantee. Okay, should be ready for anything can happen. That's the reason, like you don't bet on one single thing. You bet distribute with so many other portfolios.
Correct. Correct.
Experience. So you need a lot of experience. Experience in your own field doesn't guarantee success. And you tell, okay, I'm a big achiever, all these things. I achieved in this field so much. I want to achieve here also. Okay, that doesn't alone give you the guarantee of success. Okay, so you need to have the enough knowledge. That is very important. And enough knowledge plus experience in the market will give you success. And also God's support and luck also very important.
Correct.
In the brain you have something called amygdala. You've heard about that? You heard about that amygdala?
Yes.
Yeah. Okay. So like suddenly assume that one lion enters your house. Okay. So you don't think, okay, how the lion would have come, whether the watchman that whatever gate, whether it's closed, opened, whether this lion would have come from the forest, or how would have come, whether one lion would have come or 5, 4 lions would have come, how the lion knows only my house. So you'll not think all these things, questions. Okay.
Correct.
Immediately you think three things. Whether you want to freeze, you don't know, you don't have any escape gates at all. There is only one entrance, and the lion is standing at the entrance. Okay, you will freeze. You don't have any other place to go. Either you fly, okay, or fight back against the lion. These are three things you will do.
Correct.
So this is how the amygdala comes in picture. So amygdala does three things when you are in something in danger. So what happens as a trader, when you take any positions, it goes against you. This same thing happens for a trader. Okay, what I have to do now? I have to square off positions, or I have to carry forward the loss, or I have to do anything. Like on the demonetization day, when this market went down, if you done nothing, you don't made any losses or no profit. Okay,
Yeah.
but a person who has squared off the losses and booked the losses, then losses are remain. And
Correct,
assume the
correct.
person who was knowledgeable about the gap down or something, how to take the trade. He will take in some long position that time and made 1,000 points profit in one single day.
Correct, correct.
Okay, so how you handle, you don't allow the amygdala to handle your trades. You have to use your own logic, brain, and never come under panic. That's very, very important. Okay, unless you don't do risk reward management, this happens. Any event can come, but how you respond matters. Okay, so if event is bad, if your response is positive and no panic, and you would handle very maturely, then the outcome could be decently better. Okay, so the how you respond matters actually. So all is up to you how you handle the situation. Whether it is worst or bad, all depends on how you handle the position. If you handle it very badly, then any good event also can be bad.
Yeah.
Okay, and then I told you this thing: meditate, plan your trade. So have any, for example, any trade you are taking position. Okay, if market opens more, gap up or gap down, or don't move anything range bound. How you handle in all these situations? You have to keep a plan. If you don't have plan, that's the time you come under panic and you do all these hanky panky things. You tell okay, square of positions or take another trade, exit. All these you do. You should have a position, a plan. Okay, how you want to manage the trade next day. Whether you're taking a short term, medium term, long term, we should not bother about
Yeah.
that. So, some checklist for becoming successful in trading. There's top traders who has given suggestions. Main thing, people who lose money is because of the trend. Okay, the people who trade against the trend. When first of all, as I told you, 80% time it is a range move and 20% trending move. That 20% trending move, that time you are against the trend, then it's a big problem. Okay, you see Bitcoin hasn't moved for a long time and nothing done. Suddenly it went up to 20,000 in no time. And from 20,000 it came down to 15,000, 10,000 in no time. After that, even $5,000, if you see, it has remained for a long time. And then $3,500, $4,000, a long time, it's a range bound as it is. Suddenly the move will come, the 20% time, it will play.
Right.
Okay, the 20% time, how you manage, how you catch that will be matter.
Correct.
And never try to catch the top or bottom, because as you said that the economic crisis or something, recession will come, tsunami will come, the trending will come at the time. Okay, it will happen very rarely, maybe 6 months once. In a year, as I told you, like Bank Nifty, February and September we got that trending moves. Okay, and 10 years once, the 2008 recession we got. After that, everybody expecting 2017 will come, 2018 will come, 2019 will come, 2020 will come. We don't know when it will come. The people who have been keeping buying puts or shorting the market, thinking that market will come down, they'll make losses more than what they can. So always predicting the market or taking position based on the prediction or expectation will be the most disastrous thing one can do.
Correct.
Once you know the trend has emerged, down or up, whatever. So during the technical analysis, I will tell you how to take the positions. So fear of missing out. Fear of missing out is another problem. Okay, my friend has taken this trade. He has made so much millions. I would have taken this and made millions. Now I enter the trade. It's not that because now you enter the trade, the market will reward you. You have to take the right position, the right time. And you should always do the own analysis and never come under the scenario of okay, this analyst told this thing, that CLSA analyst told that one he wanted to buy, Ashwini Gujral told to buy or sell. Okay, never take a trade based on others. You should do your own analysis so that you know whether you made a mistake or not. You will come to know based on your own analysis.
Yeah.
Learn from your own mistakes. You should never repeat the mistakes. If you do the mistakes again and again, what you've done, nobody can save you. God cannot save you. That is one thing. And always have a strategy, stick to strategy. And you should have plan A, plan B in case the plan A fails that time. Most of the times, your one strategy will work most of the times. But there is no holy grail in the trading at all. There is no one strategy can give you 100% success. Even you can get 80% success, you are a very, very excellent trader. And have a conviction in your strategy. And no speculation or gambling. Only is a business, pure business.
Yeah.
So always for trading as a business, if you start a business, you tell there is a goal. Okay, my business, I want to take 10% return on my investment. Like that, here also you should have some goals. Smart goals we call it. You tell specific. How much percentage of profit I want? Measurable. Okay, I want 10% profit. 10% profit per annum, or 1% per week, or 2% per week, or 5% per month, something like that. Whatever you want, you can keep it. Achievable. It should be achievable also. It's not that just you started learning and you are telling that 1% per week I want. It's not possible. So in the beginning, maybe 2% per month is what your expectation can be. Achievable. It's achievable target for you and reasonable. And when Warren Buffett or top traders are doing 20% per annum, okay, on a big money, okay, you also try to do something which is reasonable, which is other traders also doing it. That kind of targets you can have, time bound. Okay, I want 1% per 1% return. 1% per week or per month or bi-monthly, bi-weekly, bi-annually. What is it? You should have time. Okay, what is the target you want to keep it? So all these things give you, in addition to the discipline, patience, will be your trading successful. So keep a goal and see, measure your goals against what you're achieving. That is very important. This everything I told you same thing. Okay, this is successful in trading. What are the steps you have to take it? Trading is a business. Again, I will just keep it repeating the same point. Trading is a business. It's not gambling.
Yeah.
That's a very, very important point and basis of your complete structure. Decent ROI is required. Return on investment, and start small but target big. You start with 1 lot, 2 lot. Okay, do consistently for 2 months, 3 months. Then you increase the position slowly, and don't change strategy. Okay, now the strategy is giving. Let us try that strategy. You don't keep rotating your strategies, and keep a track of the profits, what you gain, profit, loss, whatever. Okay, and analyze each and every trade. What is the entry, exit, how much of profit I made, how much loss I made, why I made this profit, why I made the loss, how I could improve it, and what mistakes I made, and these mistakes how I can avoid next time, why I made the mistake, when kind of this situation, how I have changed my positions. Okay, those things you should analyze also, and never think that I don't think that okay, I am the master and whatever I do, the market will follow me. It doesn't happen. Okay, you never have ego with your trading style. Over trading should be avoided. Okay, once you started profitably in 2 lots, immediately shifting to 10 lots, 20 lots is not acceptable. And you should spend enough time with the markets. Okay, you should be very friendly with the markets. Some people tell, okay, people are rigging the market. One day market, like Dow Jones, 1,000 points up one day, 1,000 points down one day. Okay, this is how the market behaves. Okay, you should not blame the market, telling that okay, why the market behaving. There's a lot of manipulation, a lot of operators are operating the market, politicians are involved, economy is involved in this. You cannot blame others. Okay, you have to take responsibility for what are the trades you have taken. When there's high volatility, just keep away from that if you cannot handle it. If you can handle it, nothing like that. And some top lessons from the top traders. Okay, if you see the same thing only, it's just summary of that. I just consolidated here. You can just go through this. Everything is just whatever reported. Same thing only. It's summary. What are problems are faced by traders? These are very few things which is a summary of problems what are faced by traders. So what happens, like when there is a loss, you just cut immediately. When there is a loss, you carry forward loss, and when there is a profit, you cut loss profits immediately. And whenever there's a good trade, you know the trade is going to be in your favor, and you'll not be able to take the trade because of fear. Okay, last time I made this loss. Now whether this will be profitable or loss making, I don't know. I cannot take this trade, and you reduce the positions. Okay, and there is something called recency bias. Okay, traders face some problem called recency bias. You heard about that, correct?
Sorry, no.
There is something called recency bias. Okay, what happens, like what happened in the near past. Okay, that will be always in your brain. You will not forget that. For example, one trade happened to be loss making yesterday or day before yesterday. So the same thing you repeats again. You will not trade the trade because it was loss making. But what will happen? It became profitable trade. Okay, now the profitable trade is in your main now. Then again, same situation comes. You think, okay, this situation is profitable. I will take position. Then it became loss making. So what happens? This is the way how the top players will play with you as retail traders. Whatever happens to you because of the recency bias.
Right.
Okay. then losing trades run hoping for a return to break even. So when there is a loss, you keep hold, you don't square off your positions, and then you think, okay, they'll come to my level, I will be selling at the time. It will never come out of. If you see PC Jewelers, some stock you have heard about that. It came down from 600 rupees, then 400, 500, to 200, 100, and 75 rupees. People who take in position think that one day it will come, one day it will come, never it will come. Okay, if you see the history, any stocks that have crashed more than 40%, 30-40% in a day, okay, it'll take several years, not even several years, you'll never come out to the past levels. The only exception of Titan, the only exception of Titan Industries in the Indian corporate. Otherwise, all the stocks which have broken 30% or 40% in a day, more than 25% say in a day, will never come back to the old levels at all. So you should never run behind such stocks where okay, for example, Yes Bank, you saw around 350 levels. Okay, now it has fallen down by say from 300 to 200 levels. So 200 levels is very good price. It has fallen down. No need to get so hurry to enter the stock. Okay, it will take time. It may take, may not take. Also, we don't know, because some people know something is cooking inside. So we will wait for the price to confirm that. And losing position adding is the biggest mistake. I told the example of the optionsellers.com. When there is a loss, if you are not squaring, at least just hold on. You don't add problems to that problem. Okay, it's very important. For example, you bought Sun Pharma at 500 rupees. Okay, it came to 400 rupees. Again, adding some more stock at 400. Then again it comes down. So you made loss on original holding, and again you made loss on the new holdings also. Then it came to 300. Then it come to 200. So what happens that you cannot keep adding losses to losses. So whenever there is a loss, you should never average the positions. You wait unless there is a confirmation, then you start adding a little more to losing position. For example, that say IDFC Bank, it went to 80 rupees. It came all the way to 30 rupees. Okay, there if you're not able to square up the positions, at least wait. Don't buy at 50 rupees, 60 rupees, 40 rupees and all. When it came to 35 rupees, bank cannot close down. Okay, bank cannot close down. It went to the bottom till all the suppliers, all the sellers get tired of selling. Once it stops down there, okay, we can read those things in the charts. Once you see all these things happening, that time you start buying. Okay, when you should buy only when the sellers become tired. You should not do buying when the sellers are full aggressive.
Right. And this you can make out on the basis of the charts.
Yes. Okay. So that's the reason I told you, like a volume profile chart is very important. Okay, that you can see one chart where you can very clearly understand whether the breakout will come or the sellers are trying out. See, in case of blue chip stocks and all, okay, you don't bother most of the times. Like what you can tell, Bajaj Auto or Hero Honda or what you can tell, HDFC Bank shares and all. You should never bother about the stocks becoming to almost like T-zeros and all. Okay, those things you can confidently buy on dips. So the dips you can find out using volume profile charts and other chart patterns.
Right.
So these are things again, just a lot of things are just position sizing. We'll cover in the risk management and all. So you just can go through this. These are the same problem what I told you. Okay, what traders have the problem managing. This all happens because of the greed and fear. If you see all the things, because of greed and fear.
Correct.
Somebody who want to make big time money, like I said already, it's reasonable. Target is 2% or 3% per month. You keep a target. Okay.
Yeah.
There is a target, and always you think, okay, I want to make a jackpot. My friend who bought some for 10 rupees and it went to 100 rupees, 150 rupees. I am looking for the target piece, then that guy will be always in loss. When the situation comes, actually he will not be able to make it, because I made one small analysis of all the jackpots, whatever was possible in the last 4 years of 152 expiry dates of Bank Nifty. And if you see, like 70,000 rupees invested become 6 lakh rupees in just less than 5 times, in 5 times only, out of 152 trades. Okay, so those things will happen very rarely, because every month, every week you go and buy something, some option, expecting jackpot will come. Means the time when it comes, you will not be able to hold it.
Correct.
The time when 50 rupees becoming 500 rupees, you will not be able to digest. Okay, when you see immediately 100 rupees, means you immediately score up. Okay, expect that, okay, last week, before that we had losses. Let us just try to book some profits. nobody will be able to wait. Okay, like Bitcoin, you bought at say $100. Okay, when it went to $200, $300, $500, will you be able to hold it? No.
No,
Till
no.
$20,000, how many people would have keep holding it till $20,000?
Correct,
Okay, so that is the thing. If you have small profits targets, you can achieve it. Because like if you see like my students, what they ask is, sir, how you keep target? What is stop loss? Okay, target is your profit expectation. Okay, your profit is say I told I will show a business plan. Your target is 6 points, 10 points maximum in per day.
Mm.
That's it.
Okay.
You got it. You got it. Just put a stop loss order and exit. That's it.
Okay.
And why bother? Okay, market is giving 100 points, 200 points. So don't bother. Your target achieved. No, that's it. Your friend made 1,000 rupees. He made 5 lakh rupees. You don't bother about that because every
Correct.
soul is different. Every mind is different. Your trade is different. Okay, if there is some loss, you only have to take it. If there's a profit, you take it.
Yeah. Yeah.
So this one table, maybe you would have seen also many of places. If you lost 10% of capital, it will take 11% to get your capital back. 20% of capital loss, you need 25% to recoup loss. 50% you lost, you need to make 100% profit to make recoup your losses. So this is the personal loss capital and personal gain required to recoup your losses. So capital retaining is very important because the capital is the main resource for your business in this business. Okay, if you are a magician, your magic talent is important. Okay, with that you can manage. If in case you are a chef, your kitchen, your chef, whatever style, your talent is enough. But in case of trading, capital is important. So preserving capital is very important. This table you should keep in your table and remember.
Yeah.
This is what I was telling about the optionsellers.com debacle. You can just optionsellers.com debacle search, you will get it.
Right.
And about the VIX betting also, about the fund, hedge fund. And other thing, basic necessities while trading is very important is a laptop, 2 laptops. Like if you're trading a very serious trader, full-time trader, one computer and laptop, and a decent broadband connection, a good software, charting software, and option portfolio analyzing software, discount brokers for trading. Because what happens, like ICC Direct, they charge 10 rupees, 20 rupees per lot. Okay, and in case of discount broker, they charge per trade, 10 rupees per trade. It makes a big difference. People lose lakhs of money only by paying brokerage. So this is very important as one of the cost of trading, major cost of trading. And then update your business news regularly. Keep updating yourself. Which news will affect which portfolio stock, we don't know. And enough backup, power backup. Like one of the cases that in Chennai tsunami came, that problem came. That time people lost power. Several traders who had positions were lost because they could not have any connected internet, or a lot of positions were there. So those things are exceptional. Nothing can be done about that. So one should be very careful about that also. And a decently funded trading account. There is a principle that when you're trading in derivatives, 50% you should have cash. That is very important, so that you always, in case of any emergency, you can fund that. Like demonetization, in the market went down, then you need to have fund your trading account for the temporary loss, okay, or unrealized loss. Once that is taken care, then when the market bounces back, that is taken care. Otherwise, they'll square up a position.
Yeah.
So cost of brokerage is very important. So when you are trading in options, you should trade options that has very small premium. If you're trading high premium, then you have to pay a lot of taxes on the premium also.
Yeah.
And while trading, another thing that if you're in case of trading options, if you're buying, if you don't square off on your own, then you have to pay on that entire strike price plus premium. So there is a guy in an MBA student who was not aware of this fact, and then what he does, he bought some 4,000 or 5,000 quantity or something of options of Nifty, and he made a profit of around 2 rupees something per lot. He made some 4 lakh rupees of profit. So he was very happy in doing 4 lakhs of profit, and he could not square on the position. He was not aware of the fact. So end of the day, contract note, he got contract note asking for paying 25 lakhs as a taxes.
Wow.
So because exchange squares of position, and he has to pay the tax on the strike plus premium.
Right,
Okay,
right,
so
right.
you should have certain knowledge about the things about how the market operates and how the exchange operates and what are the taxes, and that is very important. If you don't know that, then another killing of. Okay, small things makes a lot of difference.
Yeah.
So these are things which will be seeing also most of things: risk management, money management, which platform to use, which broker to use. There is a Think or Swim, correct? There is UK, US website, this is a software trade provider. Think or Swim is a US trading platform provider is there. They are
Okay.
doing good actually. I
Okay.
heard about them.
What are they called?
Think or Swim.
Okay.
It is a US based company.
Right.
So they provide a trading platform, no, for people who are trading in options or derivatives or trading. I'm not aware about the brokerage charges. So whenever you are opening a trading account, you should be aware of what is the brokerage, what are the different strategies. So you are planning to do trading in Indian market or US market or UK market?
No. This is just to first understand the whole basics and other things, and then only we'll have to look at it.
Okay. So, but these things you should know before doing a trading account, trading in any place actually.
Yeah. Yeah. Correct. Correct.
So before starting a trading, you should select first the country which you want to trade. That's just telling you. UK, US, China, India, extra, whatever, and repatriation of funds, how it is possible, what are the restrictions available in the country. Okay, those things you should be completely aware of that before starting the selecting the trade country which you want to trade, and
Yep.
which financial instrument you want to trade. That also you should know whether you want
Yeah.
to trade in equity, forex, commodity, or
Right.
index funds, and
Yeah.
whether you
Yeah.
want to trade in cash market or margin money, whether you
Yeah.
want to do intraday or swing trading. Okay,
Right.
those things you have to keep it to yourself and don't need to try in all the markets, do all the instruments and mess up everything.
Right.
Select
Correct.
everything
Correct.
and pinpoint what you want to do trading and be professional in the first.
Yes.
Okay,
Yes.
once that is possible, then you can diversify yourself and manage several things as a full-time trader. So I made some small business plan for Bank Nifty example. Okay, you can do same thing for whatever you are trying to do. Okay, so Bank Nifty is a big thing, right? Like Dow Jones, whatever. Okay, the Bank Nifty is not moving so much like Dow Jones. At least, definitely, it's a big thing. Keeping a lion in your room as a pet. So you cannot take it very lightly. You should be very serious about that, because every week average 500 to 700 point movement is there. Okay, so that kind of points, depending on what kind of trade you take, it matters. For example, you trade 1,000 quantity of Bank Nifty, even 100 points movement, you give 1 lakh rupees.
Yeah. Yeah.
Okay, so how much you trade, how much profit you wanted, it all matters. Okay, how you,
Yeah.
which instrument you take, whether you trade in futures or options also matters.
Yeah.
There is weekly options. There now Nifty also coming with weekly options, weekly expiring from 14th February onwards, and we get a jackpot also very rarely. But once it comes, it's very easy to capture it also. So we'll see that also, and.
Yeah.
Liquidity is very important. If you trade in some stocks or some instrument where there is no liquidity, then it will be problem for you to exit. Entering might be easy, but exiting will be difficult. So you should take care of those things. In
Yeah.
case of Bank
Yeah.
Nifty, liquid, enough liquid available.
Right. Right. Right.
Thing is that so the Bruce Lee statement one is the, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So it's not that you enter into all the countries, all the instruments and all the things you do, and you don't master anything. If you see a GP or surgeon always get always highly paid because he is a surgeon, he is a specialist. So you become a specialist one thing. Once understand everything, the same logic you can apply for others also. Okay, just for sake of diversification or something, you enter into gold, you enter into silver, palladium, commodity, wheat, maida, all these things you do, and you don't become master in anything, and then you're not performing also
Right.
anything.
Yeah.
Okay,
Correct. Correct.
so mastering is very important. Mastering is very important. So if you want to double your money in 3 years, then your return is 20% per annum is what you need to get. Okay, if you want a multi-bagger, Bank Nifty is a multi-bagger, clear multi-bagger. You can do with Bank Nifty itself. Otherwise, identifying one stock like Titan, which is from 5 rupees into 2,000, 3,000 rupees, may be difficult. Okay, nowadays you don't get such stocks because already it's identified very rarely. Out of 100 stocks, only one stock will become multi-bagger. So You invest in all the stocks, some 10 stocks or 20 stocks, only one stock become multi-bagger and rest all becoming zero. Okay, what is the point of multi-bagger? Nothing will happen.
Correct.
As I said you, for example, HEG, you invested in 50 rupees. It became 200 rupees or 500 rupees also. Do you have the patience to wait till the 4,000 rupees? No. Okay, normally no, because you will always afraid. Okay, it went to 4,000 rupees, it can fall anytime. Okay, like PC Jewelers or DHFL. It went DHFL. I remember when my son was, I was putting in school around 2004, 2005 around. It almost 10 years. From 150 rupees it went to 600 rupees. In no time it came to 600, again the same 200 rupees level in just 2 days, 3 days time. It took 10 years, 12 years to go to the level and come down in 2 days, 3 days time.
Wow.
Okay, so that is the fear everybody will have. Okay, so getting the small returns is the ideal thing, and you don't search for multi-bagger and you cannot pump in all the money there. You can try this way, your Nifty and Bank Nifty options, where you get a small profits of 2% per week, 1% per week. Start with is more sufficient, just in points.
Right.
This is a small table you can sample for Bank Nifty emulated. You can try this for some other your instruments, whatever you selected. For example, you have 1 lakh capital, then I can trade 2 lots on that, only 40 quantity, and I have 12 months in a year and 18 trading days in a month. How much I need to earn per day? I want to earn 3 points per day on net of brokerage. That's the target. If that is the case, what's the profit I can make? 120 rupees. 40 into 3. 120 is the profit I can make per day. 1 month is 2,160. Per annum is 25,920. The profit is 26%.
Yeah.
So you can double your money in 2 years and 9 months.
Yeah.
So whenever you have big targets, whatever targets you have, you break it into small points, parts, and then try to achieve that. Then it becomes simple. For example, you need to appear in exam. Then you have say 30 subjects are there. Okay, when you tell 30 subjects to study means then you cannot go and read all 30 subjects one time. First you select what are subjects, which is easy, which is hard, what are the chapters, which chapter is easy. You break into small parts and then start studying that. That's the way to achieve big goals. Otherwise, you're pumped with so many things on your head that you cannot achieve not even a single thing.
Yeah.
So similarly, like a last aggressive plan, if you want to take like 1 lakh, 60 quantity, 3 lots, and you want to get 8 points in a day average. One day will be loss, one day is a profit. Okay, and an average 8 points if you can get it. Possible that you can get 10 points in a week, one day in a week. That's it, or 50 points in a day itself. Then you trade for another 4 days. Okay, so this way you can double your money in less than 1 year. Okay, so you make some reasonable plan. Once you become a small, starting your career as a trader, part time, whatever. I want target of 3 points, 2 points. That's it. If you get more than that, then next 2 days you don't do trading at all. Let's forget it. That's it. I got my target achieved.
Yeah.
So that way you can make your plan, and this one a sample thing. That's the way you can get set your goals.
Yeah.
How to achieve big in stock market? Start small, but target big. You know Fibonacci numbers, correct? You heard about that? Fibonacci numbers?
Yeah.
These numbers in sequence 0, 1, 0 plus 1, 1, 1 plus 1, 2, 2 plus 1, 3, 3 plus 2, 5, 5 plus 3, 8. This way it goes. Start at 0, 1, but it goes to 89. Okay, then it goes 130, and then it goes very fast. So this is the way you have to proceed in your trading career, and start small with 2 lots, 3 lots, 4 lots. Okay, try to diversify yourself and improve your knowledge. That's the way you can target big. It's not that once you start now itself. Okay, like I heard about Jesse Livermore who made $2.9 million in 1 day. I want to make like that in next recession or next thing. Don't never try to do that. Okay, it's a big disaster. It could be. Okay, maybe he may be big luck or sometimes, or it's a fate for him. Okay, don't never go for such thing, which is very rare scenario. Okay, but at least try to protect the capital those times. That is very, very important. Even if you don't make big time money that time, protecting capital those times is very, very important.
Exactly. Yeah, fully agree.
Because capital is a very ultimate resource for your trading career. So doing big events, if you're not confident of how to handle it, observe the few events, how it works out, how the price movement happens, then you need to handle the big events. For example, we saw that demonetization, GST, Brexit, Gujarat election, this 5 states election. Okay, all these things, whatever happens, you have to monitor these events, how this works. Then after that, you can trade in small quantities. Don't try to handle big events very lightly because it can go anyway.
Yeah.
Okay, so this is very, very important. It can be big rewarding, no doubt about that, but it can be disaster also. Emotions optimization is very important. Greed and fear. Okay, don't think that okay today I want to make 1 crore in just one day. That's it. What happens? The same thing mindset will be that tomorrow you do the same trade again, you lose the same 1 crore. Okay, so never go for big time money in short time. Okay, that is not sustained because the mindset, because of the recency bias, you tend to do again same thing repeat, and the mind doesn't always stop there. It keep asking for more and more. So some students FAQs I mentioned here. How much I can earn money, whether I can do consistently, I can earn money, how much risk is there, whether I can do Nifty, Bank Nifty, I can do stocks, okay, how much capital I want, how many lots I want can trade. These are things. I'm sure I think I handled all your questions, these questions in the last thing. Any doubts you think you want to know this?
No, I think pretty elaborate,
Which
Ramesh. Once you share the recording and the presentation, what I'll do is that probably go through it again a few times so that I can understand probably few concepts again and again, and then it will
yeah,
really help me in the next class.
you can go through this video. You know about Vivek Bindra? You heard about him?
Yes, I have.
Yeah, yeah. See this video. It's very interesting and very good one also.
Right.
Okay, and I'll share this PPT to you, and the
Sure.
recording also is there. I'll share both to your
Sure.
WhatsApp.
Yeah, perfect. Thanks a lot, Ramesh.
Okay, man. So next week we'll have one more session.
Yeah.
I'll tell the topics whatever we cover that time.
Sure. Okay.
Okay.
Yeah.
Okay. Bye.
Okay. Thanks a lot, Ramesh. Yeah.
Bye.
Take
Bye.
care. Bye.